Good morning, bonjour, and guten tag, buenos dias, salam alaikum, and of course, zarayim tovim. Um, Hopefully the mic's coming through really well today. Replace it with my trusty Bluetooth headset. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Today is Thursday, the 16th of November 2017, and we are at 8:02 a.m. Chicago time, coming at you from downtown Chicago, the financial district. Um, Looking at the overall market stance, crude oil is lower again today. We're trading at 55.34. I want to remind you that crude rolled to January 2018 contract this morning. The contract symbol is CLF8. Remember to reload your data, but I'm being notified that even if you do roll your data, reload your data, that it has not been back adjusted yet on IQ feed. That should happen probably by the end of the session. I'm not sure. But in any case, we have rolled, so make sure you're on the right contract. The Eurostoxx 50 has ended an 8-day negative streak this morning. Eurostoxx 50 up 21 points at 0.59%. The indices are higher this morning. We're breaking above yesterday's high in the S&P 500. We're trading at 2574. So looks like the market's allocating to risk this morning. Gold is up, again, still in the range of 1279.8 this morning, up $2.10 or 0.16. But the allocation is coming out of the U.S. Treasuries, the bonds, the U.S. bonds, Japanese yen, and the Euro FX, along with crude. So market's risk appetite is back, and that's how we're shaping up this morning. Let's take a look at what we expected yesterday versus what we actually got. Here's yesterday's primary scenario. The expectation was we would likely be responsive. We were selling all night after a week high close with a lot of participation at the high on Tuesday. So the expectation is the market's likely to reattempt pushing into that profile and then fail to do so as we break from going higher and higher. Well, let me change the color here so you don't get confused by which day is which. Let's do that again. So the point of control is shifting higher and higher. As you can see here, that's the pink line you see on my charts, to dropping lower on Tuesday with a very blunt high, making it obvious that the market is participating heavily on the high side of Tuesday's profile. However, we're opening much lower, and we're looking for the market to slip down and go sideways around the balance from 25.61, the naked point of control and the naked close that are sitting there. That was the primary hypothesis. Secondary, test lower into that area and then start pushing up and getting back into balance and resuming the buying streak and potentially getting the energy now with these multiple days of balance trading to push towards the high. This is the energy we need to have our next high push. Let's take a look at what it did. Here's what actually happened. Very odd. Again, we ended up blowing through. So we opened weak. So we opened initiative. There wasn't a responsive push, so we expect hypo 2 at some point, push lower and then start to push lower by a little bit and start to move up towards the 78 area. And actually we dropped hard, even harder in the Russell, which was expected for the Russell. Balance, and then nice zipper base here, and then just back into the range and trading sideways. Yesterday's profile looks somewhat anemic, um, with two distributions, the lower distribution representing this early morning balance, and then the upper distribution representing everything that happened in the afternoon, which was really sideways. The market pushed to value low of the prior day up here, and that's where we got stuck. So really, it looked like hypo 2, but then it dropped and just sat sideways. Also, the bottom fell off a lot deeper than expected. So this is what the actual looked like. This is actual, okay, versus what was expected. So this we didn't get either either plan. What actually played out is my scenario number 4. The deeper the market goes on impulse, in other words, if the market starts initiative, meaning moving away from the most recent value, if it starts initiative, it has a hard time when it then turns. It has a hard time recovering because it expends the energy that it has built up to the downside. In this case, initiative down, it has a hard time recovering to the point that it can push much higher. However, if it had dipped below yesterday's low, like I'm showing here, consolidate, it has a lot more energy to get to that upper target, and that's what we saw yesterday. I also covered the Russell. Here's what I expected in the Russell. I expected it to attempt to go back towards 1463 and then to have a large impulse down into 55. And then I talked about the strong potential for a test of 1450 to 1440 over the next few days. The Russell looked like this. Big drop. You can see that dark gray bar. Big drop right off the open. This is highly initiative, all the way down to 53. Expected it down to 55, but I did expect that it would be responsive initially, back up to 63, and then to drop. So that was completely off. I did not anticipate that move right off the open, and therefore did not trade it. So that's how things lined up yesterday. Moving on to what we saw in the S&P overnight. Oh, what happened here? Oh, I hit the wrong key. Moving on to what we're looking for in the S&P overnight. Hang on, let's clean this up. Here's the overnight. Pretty good rally. Looks very much like the inverse of the prior day. So if you look at the prior day, we have immediate rejection of the upper prices, and we have long liquidation, or a B-shaped profile, right? So this is a B-shaped profile, long liquidation. The market moves away from prices very quickly and then finds buyers, and so it balances out. This is what happened yesterday. Today, we have short covering. Market moves very quickly towards higher prices until it finds the opposing force, and then it starts to balance up there and trade sideways, and that's what we have. So today is likely to bring in the buy the dip programs, and it's likely to continue in that direction today. So overall, the volume is about twice the normal volume versus 3 times yesterday. Remember, yesterday we had 347,000 versus 110. Today we have 240,000 versus 110. So today, pretty strong. As soon as it opened, it got above the mid, and the overnight inventory is probably 94-95% in volume long, and likely to just correct a little bit before it continues higher. So it is buy the dip time, in my opinion, and that's what is shaping up. Are you following along? Okay. All right. So, what are we doing today? So, my key plan for today, we're opening just outside of the just outside of the prior day's range. I'm going to draw a new profile as we on this gap down. So this gap down is initiative down. That's a market that is seeking prices lower. And so I'm going to draw a profile. This is the profile right here. Let's color it. Let's make it one that you can see. There it is. So with that profile, we could see, okay, where did the market really trade? The market has this kind of a distribution right now, very choppy, but there's definitely a lot of attraction to that 2577 area, which is just above. So the expectation for today, open auction that dips down, not very much. There's a fair amount that's going on at these prices. If you look at this area right here, you'll see, oops, it's not supposed to be slanted. If you look at this area right here, you'll see that the market has pushed to it. This is a kind of a faint support resistance line as it stands right now, and I'm looking for it to open, test, dip into that 71 area, then get initiative, get the biggest move up into 77 and through 78, consolidate for a bit, and then push up to 82, consolidate, and then hold steady. So we're looking for a range today between 71 and 83 or so. That gives us 12 points of range, which is what's normal on scenario 1. Okay, so how do we trade that? We're looking for what kind of action, what kind of participation do we get on the open? Do sellers dominate the move? And if they do, how does that look on your order flow? So if we're looking at the order flow and depth, here's what it looks like right now. Here's what it looked like overnight. Okay, and what we're looking for as the market opens is we're looking for a market that drops lower. Let's see if I can shift that over so I can put the hypothesis on here, or the scenario. Don't want to call it hypothesis. So let's draw that on here. It's a little bit different than what I normally do, but I think you should be able to correlate the theory with what we actually anticipate to happen. So on the open, we expect back and forth. We expect a responsive push into this volume. See the market stacking orders between 72 and 71 below, expecting that to hold down there. And then as soon as we see, so I'm expecting big prints, big circles hitting, and then I'm looking for a buy circle, a green circle to hold against that 71, 72 area, consolidate, and then I'm looking for the impulse up, and then we start to move towards the MC point of control as mentioned, consolidate there, and then all I'm doing is watching how these areas are holding up and what kind of prints we're getting. If you're confused by what this is S5 Bookmap. You can find it on s5bookmap.com, and it's the execution software that I use that also outlines what the market is doing. This software was the pioneer in heat mapping the order depth and the order flow of the markets. So let's move that out of the way. I can't see my cursor. All right, here we go. So let's get back to so that's the primary plan. Secondary plan, if we get initiative right away into 77, 78, I'm looking for a dip. I'm looking for a gap to remain open, a gap zone to remain open, and for the market to rest sideways into the session. 7 to 8 points in range, and that'll be scenario number 2. I don't expect the market to run quickly, but remember, we had this weak high that's likely to be taken out this morning, and the overnight high is still at 75.75, so we still have not tested the stops above this very weak high we left behind on Tuesday. I expect some pretty good energy above there once we flush through. So I'm actually expecting this to be a little higher, to push a little higher into the 82 and hold steady. In either case, I'm looking for upside. Scenario number 3, attempts higher, gets initiative down, and in that situation we're basically going to trade, we're likely to trade the entire value area, consolidate. Once it pushes through, we expect it to go down to the low volume node on the other side. That's this 61 area, and then hold steady into the close, pop up into the close to prepare us for Friday trading. So those are the 3 key scenarios there. I'm out of time. It's 8:17. It's 15 minutes. I'll leave you with those thoughts. Good luck today, and hopefully you find this useful. I'll catch you tomorrow morning. Take care.